Bitcoin holders are panic selling, like it's the FTX collapse all over again. Except this time, there's no exchange collapse or fraud. Hi, I'm Dan from BeAWhale, and here's everything that happened last week. Let's start with the nightmare. Bitcoin's realized losses just hit FTX crash levels. We're talking about the same intensity of panic selling we saw when one of the biggest exchanges in history imploded.
By noon Eastern, the cryptocurrency dropped to the $84,000 level, but that's honestly an improvement from earlier in the morning when it tumbled as low as $80,000. Ether, it is in the red as well, falling to $27.55, and XRP dropped below $2. All three digital currencies are deeply in the red over the past 7 days.
Let that sink in. Back then, FTX was stealing customer money and filing for bankruptcy. That made sense to panic. But now, there's no exchange collapse, no massive fraud, no company going under. Yet people are selling like the world's ending. The data shows investors are asking the same question over and over. Where is the bottom? Because right now, nobody knows. Bitcoin dropped from over $108,000 to below $89,000 in days. That's a 35% decline. And the fear? It's real. Some analysts are saying Bitcoin just hit the most bearish levels of this entire bull cycle. The kind of bearishness that usually means one of two things. Either we're about to bounce hard, or the bull market just ended. Now, let's talk about who's actually selling. BlackRock's Bitcoin ETF, IBIT, just lost $2.47 billion in November. That's the biggest monthly outflow since these ETFs even existed. Total damage, $3.79 billion pulled from US spot Bitcoin ETFs this month. And IBIT accounts for 63% of it. Think about that. BlackRock is the biggest, most trusted name in finance. They manage $11 trillion in assets. When they can't keep money in the door, there's a problem. Here's the kicker. The average Bitcoin ETF investor is now underwater. They bought at an average price of $89,600 and Bitcoin is trading below that. This isn't retail panic. This is pension funds, hedge funds, institutions, the so-called smart money heading for the exits. For months, we were told institutional investors would bring stability. They'd be long-term holders. They'd smooth out the volatility. Wrong. They're dumping faster than anyone else. Alright, now let's talk about why this is happening. 3 weeks ago, 67% of traders thought the Fed would cut rates in December. It was basically guaranteed. Now, those odds dropped to 33%. The rate cut is probably not happening.
A rate cut in December is becoming increasingly doubtful as more Fed officials are expressing caution about cutting rates.
Why does this matter? When rates are high, money stays parked in safe assets, earning 5% risk-free. Nobody needs to gamble on Bitcoin. But when the Fed cuts rates, money flows into riskier stuff. Stocks, crypto, real estate. Right now, the Fed's playing hardball. Inflation's still sticky. The economy's holding up. So, they're keeping rates high. For Bitcoin, this is brutal. The cheap money isn't coming. The liquidity isn't flowing, and investors are realizing this rally needed rate cuts to continue. Without them, the bull case just got a lot weaker. Okay, here's the twist. While Bitcoin ETFs are bleeding out, Solana and XRP ETFs are exploding. Combined, they've pulled in nearly $900 million in inflows in the middle of a market crash. Let's break this down. Bitcoin loses $3.79 billion. Ethereum loses hundreds of millions. But Solana and XRP, people are rushing in. Multiple Solana ETFs launched this week. VanEck, 21 shares, Grayscale, and they're all printing money. XRP's new ETF is seeing massive demand. So what's happening here? Money isn't leaving crypto, it's rotating. Investors aren't scared of digital assets, they're scared of Bitcoin's price action. They're looking for the next winner, and right now, that's Solana and XRP. This is exactly what happened in past cycles. Bitcoin peaks, then altcoins explode, then everything crashes together. But right now, we're in the rotation phase? Now here's someone who's not panicking. Strategy just bought 8,178 Bitcoin. That's worth about $730 million at current prices. For weeks, Saylor was buying small amounts, 400 here, 500 there. Then Bitcoin crashes and he goes all in. This is the biggest single purchase Strategy's made in weeks. Saylor went on TV and said exactly what you'd expect. If you're investing in Bitcoin, you need a 4-year time horizon. Volatility is the price you pay.
I think there have been 15 hard drawdowns over the last 15 years. I think we're overdue for one. This is just natural deleveraging of the asset. It happens every 6 months to a year. I've lived through 5 big ones since 2020.
Strategy now holds over 640,000 Bitcoin, the largest corporate treasury in the world. And while everyone else is selling, Saylor's stacking. Is he right? We'll find out. But one thing's clear, he's not scared. Alright, this one's wild. Cloudflare, the company that powers half the internet, had a massive outage. Their bot-managed system crashed. Result, 20% of websites went down, including some of crypto's biggest platforms.
Cloudflare is reporting outages on apps like X and some video games, Spotify, and ChatGPT. Now,
Coinbase, blockchain.com, Kraken, even social media sites, all offline. Here's why this matters for crypto. We talk about decentralization all the time. Bitcoin's decentralized, Ethereum's decentralized, but when Cloudflare goes down, half the crypto industry's websites go with it. That's the dirty secret. Blockchains might be decentralized, but the infrastructure around them still controlled by a handful of Web 2 companies. One bug, one error, and boom, millions of people locked out. Cloudflare blames it on a database error and fixed it fast. But it exposed a massive weakness in crypto's so-called decentralization. If we really want a decentralized future, we can't rely on centralized infrastructure, period. Let's end with something good. Kraken just raised $800 million across 2 funding rounds. Their valuation, $20 billion. And here's the kicker, they did this in the middle of a market crash. Bitcoin's falling apart, ETFs are bleeding, panic everywhere, and Kraken's out here raising nearly $1 billion. Why? Because smart investors know this. Bear markets are when you build. Kraken's also filing for a US IPO. They submitted confidential paperwork to the SEC. If it goes through, they'll join Coinbase as one of the few publicly traded crypto exchanges. The timing's perfect. Markets are scared, prices are low, but Kraken's looking years ahead, not weeks. This is what conviction looks like. DappRadar, one of crypto's biggest analytics platforms, just announced it's shutting down. They tracked blockchains and dApps for years, but couldn't make it work financially. Another casualty of the bear market cycle. ARK Invest just scooped up $39 million in crypto stocks, Bullish Circle and BitMine. While everyone's panicking, Cathie Wood's buying. She sees blood in the streets as opportunity. Crypto quant analysis say Bitcoin just hit the most bearish sentiment in this entire bull cycle. Historically, extreme bearishness means either a massive bounce or the end of a rally. Bitcoin losses matched the FTX collapse. BlackRock's ETF bled millions. The Fed killed rate cut hopes, and Cloudflare took down 20% of the internet. But here's the thing, Solana and XRP are exploding. Saylor's buying the dip. Kraken raised $800 million. The fear is real, the pain is brutal, but crypto's not dead. It's rotating. If you like this recap, smash like, subscribe, and I'll see you next week.